Welcome back to Cash Flow. Hey, times are kind of cool for us entrepreneurs because interest rates are dropping. And they're probably going to continue to drop for a little while, which means if we need to borrow money or we want to borrow money to grow, it's going to be a little cheaper than it has been in the past. You're going to see a little bit of a lower interest rate. You'll see it personally as well in car loans and home loans. But guess what? It also applies to your business. What I'm wondering is if, kind of raise your hand here, drop a note in the comments. If you're one of those folks who's got a great business, your P&L looks good, you're making money, you think, and you go into a bank and ask for money and they say no. They just right out say no. You take it a little personally, because we all do, and think that it's them kind of not supporting small business or not liking your story or not liking you. And the truth of the matter is, I hate to bring the bad news to you, but turning the victim mentality on in this situation is not the way to get the right answer. The reality is it is you, but it's not that your business is bad. It's not that you're bad. It's that you're not providing the information they need to be able to clearly see how good you are. If you walk into a bank with your profit and loss statement, it's not enough. And I have helped entrepreneur after entrepreneur get over this hurdle, and I'm going to help you do it today and tell you how to escape that vicious no cycle. Now, there's a little bit of wake-up call to this, so be ready for that, but it's all so fixable that I don't want you to prevent yourself from getting money from institutions when it's time to do that. So let's walk through it. Let's walk through why you can't get the money you think you should get and how to fix it so that next time you go in, you do get the money you think you should get. Very fresh story in my mind. I have a client right now who's looking to borrow a good bit of money, actually going for an SBA loan, which is even more of a trial than a normal bank loan. But in doing this, they came to me and they're like, hey, our profit and loss statement's great. I don't understand the problem. And the reality is any accountant or banker who's deciding whether or not to give you money. You may hate accountants and think there's no reason to do what accountants do, but you can be sure that the banker who's looking at your business is going to ask the questions that I'm asking right now as an accountant. They're going to say, give me your P&L, give me your balance sheet, and tell me about your business. And that balance sheet is the thing that most people overlook. Whenever I take on a new client, the very first thing I nail down is the balance sheet. Because although that's not something you might look at on the regular basis, anybody who's watching out for you and your money and your ability to get more money is focused obsessively on your balance sheet. And that's kind of my job and what I do. But you can do it very easily yourself. So we're going to walk through how you do that. Don't ignore this statement. It's the one thing that tells them whether or not you're actually going to be able to generate the cash to pay them back. And that's the long and short of it. So my particular client had been up for this loan before and was just furious. They don't understand my business. They don't understand, how we get our stuff, how we sell our stuff. They don't know or see that, everything we're telling them is absolutely true. And the bottom line was no, they weren't seeing it because their balance sheet was a mess. And why it's called a balance sheet, think about it this way, is the balance sheet makes sure that anything the banker's looking at on your P&L that you so proudly present to them is rock solid and true. If you just hand them the profit and loss statement and you can't explain that balance sheet, they're not going to trust a thing on that P&L. That is the hard, plain truth. So get over your P&L if you want to borrow money, okay? Sounds a little harsh, but it's true. So let's jump in. And I'll tell you why. She really thought it was a hustle, right? Because when they looked at her books, they looked and they saw that nobody knew what was on the balance sheet. And given that, they didn't have confidence, frankly, that she could run a business understanding her cash flow, which is a real truth. Most business owners don't know that connection between cash and the income statement, which is why we're going to talk to you about it now. The long and short of it is banks are not going to fund chaos. They understand entrepreneurs. They understand that they move fast, but they also want to understand that their financials are very much under control. When that clicked, there was a real turning point for this business. And we took the next 60 days to get it all cleaned up and bank ready. And there are a few things you can do in order to get there, and I want to really walk you through that. The bottom line is banks don't care about your feelings. They don't care about how much time and energy and love you've invested in your business. They don't even care about your vibes. They care about your financials. They're going to say essentially, hey, you don't have any forecasting here. You don't have anything to tell me that you know what's happening in your cash account. You can tell me what you think you're making, but you can't explain to me why your checking account balance is changing so much. And there are three things driving those questions. One is they need clean books. They need clean books. And if you're in a business and you want to go get money from a bank, you need a bookkeeper, you need clean books. And you need a bookkeeper who actually understands accounting, not just somebody who's taken some QuickBooks course and hung a shingle up saying, hey, I'm a bookkeeper. You want a real solid bookkeeper who understands accounting. You want a cash flow forecast. And we've talked about that on this podcast. It's not really hard to do. You can literally do it in 15, 20 minutes on a spreadsheet or even on the back of a napkin. And all you're doing with the cash flow forecast is saying, here's the money I think is going to come in if I borrow this money. Here's the money that's going to go out if I borrow this money. And include in the money that's going to go out the fact that you're going to have a loan payment. When they see that that comes out positive, that you're bringing in more than you're going to be paying out, including your payment to them, that changes everything. And if they know you've thought about that ahead of time, it's a game changer. Right there, that alone will make a huge difference. And then finally, understand and be able to explain why you need the money. And not just why you need the money, but for how long, right? So the reason isn't as critical as knowing how long you need it for and that cash flow forecast showing that you can pay it back. So let me give you a couple of examples. In some cases, the loan might be because, hey, I have a bazillion credit card balances. Those payments are killing me and the interest is massive. So even though I'm making money in my business, I'm just paying it all to the credit card companies. Well, a good lender is going to see that in your numbers on your balance sheet and go, yeah, shoot, I can absorb all of that, create, a $100,000 loan to you, reduce the payment, make it over a really long term, give you lower interest rate, and all of a sudden, you're going to see the cash in your business again and you can breathe. You're not like totally burdened by that old debt. So that's one really good reason for debt. The second really good reason for debt is growth. So in a lot of cases for our businesses, if we want to grow, like say we want to double, there's some expenses we have to put in ahead of time before we're going to actually start to see the cash come in from those extra clients that we're going to get. And there's this period of time between when you decide to grow and when your new clients actually start paying you, where cash is going to be a little tight. And if you can explain that story with your cash flow forecast and say, hey, that's the reason for debt. It's to have working capital so I can grow. That's another, here comes the dog. That's another really good reason to have debt. So you need three things when you walk in. You need clean books. You need a cash flow forecast that shows you can pay whatever the debt's going to be, debt payments are going to be. And you need a story about why you need to incur the debt, why you want to borrow that money. So let's fix this for you kind of right now. Here's an action plan you can put right into place. Let's assume you've got QuickBooks. And if you don't, that's your first project. Get some sort of bookkeeping system. It doesn't have to be QuickBooks. It can be QuickBooks. It can be Xero. You can hire some bookkeepers who will do it in Excel for you. And frankly, pro tip, if you want to feed your bank statements and your credit card statements into a AI, it'll create books for you. So there's a little bit of a quirk to that, but pretty easy to get AI now to help you put those books together. So that's your first project. Make sure you have books. And when I say books, I mean make sure that you run a P&L, which you're familiar with, your income statement, how much money you think you're making, and make sure you run a balance sheet. And on that balance sheet, make sure that your bookkeeper, if you have a bookkeeper, or you, if it's you, know every single item on that balance sheet. Now, what's on the balance sheet? What's on the balance sheet is pretty much what you own and what you owe people. And that's why they want to see it. Your P&L tells a great story. It's what you're doing. It's how much you charge minus how much your expenses are. And that's great. But the bank also needs to see, what do you own and what do you owe people today? And that's what that balance sheet will tell them. So if you run your balance sheet or your bookkeeper hands you your balance sheet and you see something that says, loan to John Smith, and you don't even know who John Smith is, that's something that needs to get cleaned up before you go to the bank. So a lot of times what we'll do when people need to borrow money is we do a bookkeeping cleanup so that they can actually walk in and get that money. Okay, so that's step one. Get your books in order. And while you're at it, if you want to be borrowing money from a bank for your business, separate your personal and your business checking accounts and credit cards. Just do it. I know it's easier. I know sometimes you need money from one pool to go into the other. So move the money from one pool to the other when you need to. Stop using one checking account for your business and personal. Stop using credit cards. Every credit card should be either a business credit card or a personal credit card, or you're not going to ever get past a banker to get a bank loan. It's that simple. Okay? So separate them. It's not that hard to do. And sure, sometimes you're going to use that business card for something personal, or you're going to use that personal card for something business. But 90% of the transactions on each of those cards should be specifically for either the business or your personal stuff, so that when you go into the bank, you can give them a carved out picture of exactly what the business looks like. Okay, so that's all part of getting your books in order. That's the step one. We call that a fundability check. If those things aren't in place, the bank's already written you off before the first word's out of your mouth. So just do it. Do it. And we have AI now which can help you do it. Step number 2, create that cash flow forecast. This is not as hard as it sounds. And I've got a lot of YouTubes on this very station. I've got podcasts on the podcast stations. I have blogs, you name it, telling you how to do this in a very easy fashion. And it really is as simple as, I'm going to go through it quickly here. You start with your beginning cash balance. How much am I going to make in week 1? How much am I going to spend in week 1? What's your new ending balance? How much am I going to make in week 2? How much am I going to spend in week 2? Then you get your new ending balance. And what you're going to see when you do that, and no, it's not going to be perfect. That's not the point. It's a forecast. Forecasts are one thing for sure, wrong. But it shows that you've thought about it and you understand how your business money comes and goes. Bankers want to see that. They want to see that you understand enough about your business that they're planning to give money to know that you're going to understand how your cash grows and when your cash shrinks. And what you'll see when you do that cash flow forecast, what you should see if you're coming to a bank to borrow money, is that without that bank's money coming in as an inflow, your cash balance is going to go negative. And that's the whole point of the loan, right? You need the loan so that in those weeks when your bank balance is going to go negative, you actually have cash you can access. Okay, so very important. You can scribble it down on a piece of paper. You can put it in Excel if you want to take advantage of the formulas. You could even have AI generate your cash flow forecast. Type in something like, hey, every week I'm going to bring in $1,000. Every week I'm going to spend, every other week I'm going to spend, $100 on payroll. Every week I'm going to spend $50 on office supplies. Just throw up into AI exactly what's going to happen in your business over the next few weeks or months and say, create me a cash flow forecast. And it'll do it. You can even tell it what your beginning bank balance is, and it'll tell you exactly how much money you'll have in your account every single week. So this anymore is not anything that there's an excuse to not do, because you can literally talk to AI and have it generate that for you. Okay, so let's create it. I'd create a 6-month cash flow. For the most part, you're not going to borrow money for much less than that, and the bank's going to want to see in that cash flow forecast how you're going to be able to pay them back. And the last one is probably, once the first 2 are in place, the most important. But if the first 2 are in place, they're not even going to listen to you. But most entrepreneurs lead with the last step, which is the story. Here's why I need the money. Here's why I can pay you back. Here's how long I need it. But they don't have the financials or the cash flow forecast to support it. So it's important. You need to say in very plain English, here's why I want to borrow this money. Either I want to consolidate my debt, I want to grow my business faster than I could by myself. And whatever the story is, just say it in plain English. You don't have to talk accounting geek. Your books are doing that for you because you've straightened your books out, because you've handed them a cash flow forecast. You're going to now tell a story, and when you tell that story, it's going to make sense out of those 2 things. Without those 2 things, your story is worth exactly what you'll get from the bank. Nothing. Okay? So get the other stuff in place. I'm sharing this with you because I know it's very frustrating to be grinding it out. You've built something real, and it really feels like the system is built against you. And the truth of the matter is, it's not. The truth of the matter is there's some things you can do that might not be the sexiest things in business, but they can build that foundation that lets banks lend you money. And real wealth, which is what you're trying to build in your business most likely, is really what that's all about as well. It's understanding that the amount of cash in your bank account over time is going to grow, so you can do more and more things with it. So clean up that financial house. Go ahead, bite the bullet now here. And we're coming in on year end. I don't know when you're listening to this, but right now we're coming in the last quarter. Clean that house up so that next year, when interest rates keep going down, you've got access to the cash that's going to be out there to lend people. They're looking for people to lend it to. You want to be one of them. And it's as easy as get those books in order, including separating your personal and business stuff out into 2 separate accounts. Get a bookkeeper. It's not that expensive, or use AI even with your bank statements and credit cards. Get a solid set of books. If you don't know what that is, look it up in AI or re-listen to this podcast. All it means is have a P&L and a balance sheet and understand both of them and what's on them. Hand those to the bank, hand them a cash flow forecast, tell them your story. With those 3 things, your likelihood of getting money becomes your odds of getting money become exponentially higher. So that's it. I am here if you have questions, so drop them in the chat, drop them in the comments, anything you'd like. Do me a favor, hit like if this was useful to you, subscribe if it's useful to you. We continue to hit on topics like this over and over again with cash flow. We kind of bring out the blunt truth, but also give you the very easy way to get there. And then if you have friends who this will be useful for, please feel free to share it. I'm Pam Prior, your host, and I hope to see you on the next Cash Flow.